Hi, buddy. Welcome once again. Now, how does it feel to do business with government, or rather, to make money from the government? Yeah. So today we are going to look at how to make money by buying the treasury bonds. So ideally, I won't really break down everything, but at least I'll give you some information that most of us have requested on how you can go about these treasury bonds thing. Kindly be maybe aware that we have quite a number of different bonds. So I'll specifically talk about treasury bonds. So, what is a bond? Maybe for those of us who don't understand, it's a debt security where the bond issuer, that is the borrower, issues the bond for purchase by the bondholder, the lender. So, sometimes it's known as fixed income security. So, a bond usually gives the investor a regular or fixed uh, return, right? So, point to take home is the borrower, the lender, right? So when you invest in a bond, you are essentially uh, lending a sum of money to the bond issuer. So in return, so you'll receive some interest, very key, interest payments, which is normally also referred to as coupons, at scheduled intervals, and capital repayment of your initial principal amount at an agreed date in the future based on how you calculate the maturity date. So, in a nutshell, that is what a bond is. We are not here to discuss what this bond is all about. So, how does it work anyway? So, you can see here we have the individual investor and we have the bond issuer. So the bond issuer here in our case is the government or the treasury, and you're the investor here, isn't it? So you lend. How do you do business? You lend your money or assets to the organization. Yeah. So this organization is the government in our case, isn't it? So the government will offer. You see, the government uses your money to do its projects, right? So it will issue bond, it will pay you some interest over a period of time, right? And of course, the principal. So it's something that goes round and round, right? So why invest in bonds anyway? So there are higher returns than bank deposits. So we are comparing it with bank. So bonds typically pay a higher yield, which is actually a higher yield is actually return. Then bank deposits pay a similar term on tenor. A regular income. You know, when you invest in bonds, you are guaranteed. Bond issuers are bound by the terms of the bond payout, right? And against hedge against inflation. Yeah. So with proper bond selection, you may potentially earn an investment return which keeps pace with or even exit. From time to time, the bond issuer or the government will always try to protect you against this inflation, and of course, capital appreciation. Yeah, so like all other instruments, secondary market, the price of the bonds can appreciate or depreciate, but mostly because you're dealing with the treasury bonds, we always expect that you capitalize or your capital improves, right? Of course, in any business or in any activities that involves money, there are quite some risks, right? So we have the credit or default risk. So this is a risk that the bond issuer or borrower is unable to meet uh, the coupon or the money that you're supposed, the interest, right? Right. So this one always has some issues. Yeah. That's why it's important to invest your money in places where you know that the bond issuer uh, has some good reputation in terms of managing to pay, right? So what you're saying is this: the issuer can go bankrupt, right, or insolvency can happen. Interest rates are at risk. This happens across the board. So interest rates and bond prices are inversely related. So should interest rates rise, the price of your bond will tend to fall, which is actually, and vice versa. So the longer the time of maturity of the bond, the greater the risks. And at the same time, you never know. So foreign exchange risk also bounds or comes into play as one of the major risks, right, when you're investing in bonds. So the impact of such foreign exchange movements may offset any interest or capital returns you may receive. So I hope you understand the concept. If you don't understand this in details, we can always give you some guide. Just request for more information within the comment. So let's get started with treasury bonds, because this is what we are talking about. Treasury bonds in Kenya. First, what are they? A treasury bond, we're talking about a treasury bond, is a type of debt-based investment where you loan money to government, right, in return for an agreed interest rate. So government use this to do some projects I mentioned, right, or they can purchase some infrastructure and so on. So in Kenya, there are two primary types of government investments available. This is T-bills or treasury bills, and bonds, treasury bonds, right? So it should be 18 years and it should be eligible, so that should be eligible to do to participate in these. So what's the difference between T-bills and T-bonds? They are short-term investments, right? The maturity is normally less than a year. I believe that is basically time lines or time frame, right? So there are T-bills that are available in three durations: the 3 months, right, and 1 year. We also have T-bonds, treasury bonds. So with them, they have longer maturity period, exceeding 1 year, right? So I think these are for people who want to have long-term investments, right? So up to even 25 years. So you can put yourself, would you want to invest in T-bills or treasury bonds? So we are talking about treasury bonds here, right? So step one, meeting the requirements. This is the first thing actually to engage in treasury bonds. So do you have a copy of your ID or passport, and also a photograph, right? You see, and do you have a bank account? Those are the three things. And we also mentioned you need to be 18 plus, isn't it, right, for you to engage in these. Step two, you need to go to Central Bank of Kenya, right? This is the regulator. So the CBK branch will open a very important account, Central Depository System account. So the CDS, right? So this account serves as a record of government securities ownership. Yeah, this is the account that will allow you to participate in what? Treasury bond trading. So I hope you're getting the concept. Step three, you need to obtain a mandate card from the central bank and ensure that you complete it in a clear block. I've captured a screenshot of the same. So the mandate card requires you to provide your contact information and details regarding your commercial bank account. So it's just like some agreement. You sign that form, right? Captures is more or less associated with your CDS, right? Step four, you need to verify. Visit your bank for verification, right? So take the field mandate card that you have seen to the bank for verification. From here, the bank appends its stamp and signatures of the two authorized signatories. So this step satisfies the CBK's requirement of having a bank account with a specified bank. Step 5, you need to submit the documents to the what? CBK. So return to the CBK and submit the verified mandate card along with the required documents such as, so you have to submit what? A mandate card, colored passport size photo, certified and stamped, by the representative. So in addition, you'll be required to fill out the email intermediate agreement, which requires a witness, and submit a clear copy of KRA PIN, national ID, or if you don't have passport. Get the requirements. These are the documents you need to what? To submit. You may also be required to register for the mobile direct, right? This will allow you to access specific mobile services. So you just need to dial this number. I believe they have not changed it. So the CBK will then process your application within maybe 1 to 2 weeks. Should be approved, right? What remains is now to start trading, right? So once you have the CDS account, which is very, very important, right? Let me just underline it. You are ready to dive into treasury bond trading. So this means you can actively participate in auctions and transactions to buy treasury bonds, right? So as you can see, I'll cut short maybe the process of making money through the treasury bond, right? So let me just know from the comment section if you want us to dive deep into this bond trading journey, because the next is just now maybe how to do the actual trading, which is another segment that is very, very different from these steps that we have mentioned. So I hope this particular information is an eye-opener towards maybe getting involved in the treasury bonds, knowing what bond is, right, and the requirements that you need to have, right? So should you find this information useful, hit the thumbs up, like it, and of course don't fail to subscribe. All right, thanks.